J.P. Morgan canceled his Titanic voyage last minute, claiming illness, while secretly knowing the ship would sink. The world's most powerful financier mysteriously avoided history's most famous maritime disaster through convenient timing. Evidence suggests the Titanic's sinking was orchestrated insurance fraud designed to save the White Star Line. White Star Line faced bankruptcy after their sister ship Olympic suffered massive damage in collision. Repairing the Olympic would cost more money than the company possessed, threatening complete financial ruin. J.P. Morgan owned the International Mercantile Marine Company, which controlled the White Star Line entirely. But that's not the worst part. Morgan had secretly insured the Titanic for extraordinary amounts. The insurance policy covered exactly £1 million, worth over £100 million in today's currency values. Morgan arranged for his closest associates to cancel their Titanic bookings through mysterious last-minute excuses. Milton Hershey, George Vanderbilt, and other Morgan allies all avoided the voyage through convenient circumstances. The ship's designer, Thomas Andrews, was forced aboard despite expressing serious concerns about structural integrity. Andrews had discovered fatal flaws in the bulkhead design that Morgan's company deliberately chose to ignore. Captain Smith received orders to maintain dangerous speeds despite receiving multiple iceberg warnings throughout the day. The ship's lookouts were denied binoculars, making iceberg detection nearly impossible in the freezing darkness. Radio operator Jack Phillips was instructed to prioritize passenger messages over critical ice warnings. The truth gets darker. Morgan's company had deliberately reduced the number of lifeboats on board. Maritime law required only 16 lifeboats, but the Titanic could have accommodated 64 safety boats. Morgan's executives chose profit over passenger safety, installing dining rooms where lifeboats should have been. The California ship was positioned nearby, but mysteriously failed to respond to the Titanic's distress signals. Evidence suggests the California's captain received secret instructions to ignore any emergency calls that evening. J.P. Morgan personally selected the crew members, ensuring loyalty to his financial interest over passenger safety. First-class passengers included Morgan's business rivals, conveniently eliminating competition through the strategic maritime disaster. The ship's construction used inferior steel that became brittle in freezing temperatures, ensuring catastrophic damage. What happened next will shock you. Morgan collected the full insurance payout within months. The White Star Line's debts disappeared overnight, while Morgan's wealth increased substantially through insurance claims. Government investigations were controlled by Morgan's political allies, ensuring no criminal charges were ever filed. Key witnesses mysteriously disappeared or changed their testimonies after receiving substantial anonymous financial payments. The official inquiry blamed natural disaster. Rather than investigating the convenient timing of Morgan's cancellation, Morgan's International Mercantile Marine Company emerged stronger than ever, eliminating competitors through the calculated tragedy. Today's maritime safety laws exist because 1,500 people died for one man's insurance fraud. Modern insurance companies still reference the Titanic case when investigating suspicious maritime claims and cancellations. The Morgan family fortune, built partly on Titanic insurance money, continues influencing global finance today. This wasn't a tragic accident, but calculated murder disguised as natural disaster for financial gain. The Titanic's victims died not from iceberg collision, but from corporate greed and deliberate criminal negligence. Subscribe and comment for more shocking truths. We'll expose the hidden reality behind everything